as you look around the world and you think, where can I put my money? There's really only one country that stands out, and that country is China. China today is basically the only major bond market offering investors positive real rates. And unsurprisingly, given the setup, what are we starting to see? We're starting to see significant foreign inflows into the Chinese bond market. So now, roughly, basically 20 to $30 billion US dollars of foreign money are coming into the Chinese bond market month in, month out. Combine that with the 50 to $70 billion of Chinese trade surplus, and that's anywhere from 75 to $100 billion that are coming into China month in, month out. And this, of course, leaves the Chinese government with a quandary. With so much money coming in, does the Chinese government let the renminbi revalue? Well, yeah, it does, and this is happening. Few people realize this, but the renminbi, if you look at the world's major currencies, the renminbi is now the world's best performing currency on a 10-year basis, on a 5-year basis, on a 3-year basis, on a 1-year basis. On any time frame you care to look at, the Chinese renminbi is basically beating the pants out of every other major currency. Which brings me to this chart, which for me is one of the more important charts. This looks at the total returns of the various bond markets denominated in US dollars: China, US, Germany, Japan, i.e. let's call them the big four. Look at how, up until roughly a year ago, China and the US were outperforming everybody handsomely. And how in the past year, the divergence in performance between China on the one hand and everybody else on the other. US total return for bond investors in the US and Germany and Japan have all been very poor over the past year. And this in spite of an economic shock of unprecedented severity. The one place where if you're an investor and you wanted to basically deliver positive, steady returns, the one place you did manage to find that was China. And this for a very simple reason. That is that while in the Western world, the central banks have basically adopted policies of negative real rates, massive QE, massive money printing, and in essence, debasement of their currencies, China has gone 180 degrees. And while basically in the US and in the EU, policymakers are very busy stepping on the gas, out east, and especially in China, policymakers are already stepping on the brakes. And you see this whether through regulatory policies, whether through the anti-corruption drives, whether through property curbs, whether through liquidity injections into the bond markets, whether through the actions of banks. Basically, China is in tightening mode. So as investors, we're left in the odd and somewhat unprecedented situation where the largest economy in the world is stepping on the gas and the second largest is stepping on the brakes.